Today, Governor Lowe and the Reserve Board met for the first Tuesday of October and they've cut the cash rate. Now, 75% of economists believed that that was going to be the case. And if you were listening to some of the commentary last week from Governor Phillip Lowe around his concerns in the market, it was pretty clear that he was signalling to the market that he was going to cut the cash rate, and that's exactly what he did. So let's take a look at the economic data and the readings that we saw through the past month to see exactly what's happened in the economy over this past month. So let's look at the GDP numbers that came through for the June quarter, and they weren't necessarily great numbers, but that's on the back of the uncertainty that we had coming into the end of last year and moving through. So that's all our lag data that I've been talking about. So GDP growth for the June quarter was only 0.5%. So the economy is still growing, but it has meant that the annualised rate of growth has moved from 1.7%, which we saw in the March quarter, now down to 1.4%. So it is the slowest growth rate that we've seen in our economy for nearly 10 years. So obviously work needs to be done. Turning our attentions to the global market, what we did see there is, some real continued uncertainty in regards to what's happening with the global growth story. And that's led to, obviously, the Fed Reserve, which we saw earlier, reducing their interest rates. We also saw the European Bank also reduce their outlook in terms of monetary policy easing. And we saw China also do some movements around easing some of their monetary policy levers to try and stimulate growth. So overall, the story for the RBA is around a easing policy or an easing bias going through globally, and that's obviously means that Australia is caught up in that global slowdown. So that was one of the reasons for the thinking around the RBA's decision today. In regards to the other big news of the moment is still the impeachment or the potential impeachment of President Trump in regards to some of the comments that he's made in negotiations. The other thing that is quite interesting from a positive point of view is there's sort of some indications that the trade war that's going on between the US and China may be coming closer to an end. So that could be closer than we think is what the commentary was saying there. So that would be a very, very positive sentiment story. So if there was some type of settlement in regards to that, I suspect you'd see some more optimistic commentary coming out and moving sentiment in terms of the global growth story. So that's what's happening globally and one of the big reasons for today's decision. In addition to that, the other big mover is really around the labour market. So we've been talking about this for some time now, but it really is, the decisions that we saw today relates to, some job number data that came out. So our unemployment rate, growth remains pretty strong. So growth we had in terms of job growth, 34,700 jobs created for August. And the average jobs growth that we've seen since the start of 2019 has been 26,400 jobs being created every month. So that's the good news story. The challenging part is really around the participation rate. So we've again seen a record high level participation rate of 66.2%. So, that is in itself, the story of the greater population and more people arriving here and looking for work. So that has meant that the unemployment rate moved from 5.2 to 5.3%. And so that's not a great number, and the RBA has obviously been weighing on their minds. In addition to that, job vacancy data, we did see that at the end of August being reported as falling 1.9%, and it's the second quarterly decline in terms of job ads. Annually, it's 1.9%, which is the first annual decline that we've seen in 5.5 years. So expanding on that more is still a little bit of a negative story around skilled labour. So skilled vacancies edged down 0.1% in August, and that's on the back of also a negative number in July. So there's 8 straight months of declines in skilled job vacancies as well. So again, this is where the challenge lives in regards to that. And I mentioned earlier what Governor Lowe was talking about last week in the speech. He was talking about further progress towards full employment and to achieve the inflation target over time is one of the catalysts for their decision today. So Governor Lowe does believe that the economy is on the way, it's at a turning point, it's at that. But in terms of how strong that growth is and or how gentle it is, and he was referring to a gentle turning point, in terms of economic growth. So we'll see how that plays out and what that does over the course of the next couple of months and then leading into the next couple of years. So let's move on from the labour market where the story isn't so great, and let's look at also the consumer confidence survey from Westpac and the Melbourne Institute. And we saw again a decline of 1.7%, and that's now moved that margin down to 98.2, which is below the 100% mark, which separates expansion from contraction. So that's where, in terms of confidence, the tax offsets, the tax cuts, those bonuses that we saw, or the offset that we saw coming back in, hasn't really materialised into some of the data just yet. So the economic data is not showing that through. Now, it is materialising in some way, right? The money is going somewhere. So whether it's going into consumer spending or paying debt off, it will come down through the numbers because it's obviously not being kept under the pillow because it's paid into a bank account, and then it's up to the consumers in terms of what they do with it over time. The positive reading in this part of the report was in regards to the long-term expansion. So over the course of the next 5 years, consumers are actually pretty confident that they'll see prosperity and economic growth. So that definitely moved up higher over the course of the month's reading. In terms of that though, however, short-term negative sentiment will probably persist throughout the course of the remainder of this year, and hopefully we get out the other side where consumer consumption starts to pick up and sentiment starts to move in that way as well, in that direction. Let's move to business confidence and the conditions there from the NAB survey in August. So conditions, so there was a reading of the market there that it was a 2-point fall to just being +1. So overall, still some positive signs in confidence, but a fall. So that's not great. And in terms of, that's the conditions, in terms of confidence, that also fell by 3 points. And we saw that as only a +1 still sitting at there. So the feedback is really just around two things, at the moment, at the trading floor, the conditions, out in the trading, business trading conditions, and the global uncertainty is what the message was coming through in regards to the business confidence and conditions survey. On a positive note, housing lending. So we did see a reasonable bounce in the data that we got. Owner-occupier approvals up 4.2% in July, and that's the fastest growth rate since June of 2015. Investor lending has also spiked, increasing by 4.7% as a monthly increase. And the other good news story here is really for around the first home buyer. So the firsties are back in the market in a reasonable way. The percentage of the market that they currently have now is 19.6%, and that's at a 7.5-year high. So good to see the first home buyers back in the marketplace trying to get their first home. In terms of construction, there's definitely been some also positive numbers in regards to house and land. So we're going to start seeing some of that moving through in terms of construction jobs. But one of the biggest employer is really the medium and high density apartment market, and that's still struggling, as we've well documented. The three problems with this particular market here is the poor valuations for those people who did buy off the plan, so some of them with negative equity. That's on the back of also, some pretty ordinary construction and cladding issues that we have around the quality of the construction work. And that's also now leading into obviously financing any new projects that are coming through the wings. So, that's going to be a bit of a problem, I suspect, into 2020. In terms of the medium and high density apartment market, and that's going to obviously more broadly affect the jobs growth in that particular sector, and we might see some job declines in the construction sector in that area. In the past month, we also saw an update in regards to the federal budget, and really some positive news here. We saw only a deficit of 0.7 billion, so very, very small deficit, almost a balanced budget in the latest figures that have come out from Treasury. So that's obviously a positive news story, considering, the same time last year we had a $10.1 billion deficit. So, this is where we are seeing a little bit of politics playing out in regards to what's happening with economic activity. We are seeing the RBA calling on the federal government to do more in regards to their fiscal policy, because monetary policy, we've almost gone to the bottom of the well in terms of what that can do to make money cheaper to stimulate the economy. But this is the politics playing out, because I wanted to spend some time on this. And yes, politics does play a role in terms of our economic prosperity. And the Liberal Party are doing something here which is really all about the Liberal Party. So, and that's disappointing in regards to the broader economy. And what I'm talking about here is this is the politics that they're playing. So because we're only just past the election, and the Liberal Party has sworn to deliver the first surplus, which will give them greater economic credentials to the voting public. So they are holding out in regards to announcing any fiscal stimulus into the market until they deliver that surplus, which is we're probably in surplus now. So what we're going to see is Treasurer Frydenberg announce, I suspect, in the May budget next year, some stimulus that is going to flow into the economy. Now, my tip on that stimulus is going to be some further tax cuts, and potentially moving some of those tax cuts to be in earlier than what they were originally planned for. Now, that is obviously great for people in the lower incomes, because that pretty much flows straight through to the economy. And the other big announcement that we would expect during that time is also the New Start will also be increased when they announce their budget numbers in the May budget. So unfortunately, we're going to be holding out for that because the Liberal Party want to score political points in regards to being the political party that runs the economy better than the Labor Party. So the economy is going to suffer until such time as the Liberal Party makes some decisions around that. And because an election's still 2 years away, they believe that they can hold out for that and get the economy moving when it needs to, when it leads into the next election. So unfortunately, that's the politics of our economy at the moment, but that's my read in regards to what that looks like. So in summary, what is supporting the Australian economy really is the lower Australian dollar. That's doing its job in terms of going down to record lows, which is great for our exports and our miners and so forth, and they seem to be doing a bit of the heavy lifting at the moment. Obviously population growth is a real interesting story here, and I just got some numbers on that. So, you know, we've got around 370,000 people over the past decade coming into Australia to call it their new home. Now, considering the previous decade, that averaged at around sort of 217,000. So there's no doubt that they are having a positive impact in terms of consumption and moving the economy. But we need to do more in regards to obviously offering them jobs, and that's why the RBA have signalled that full employment is their number one goal, because that will also then correlate into some better inflation numbers, which is obviously their mandate of full employment for those who want it, and also an economy that's growing 2 to 3% per annum in terms of the cycle. So I think the other positive stories are going to come out of house prices are continuing to grow around the nation, so people will feel a little bit more comfortable about their spending, and obviously in regards to low inflation and state infrastructure spending is also going to be a positive to support the economy. So we're not going to be anywhere near a recession, even though that is still talked about in the daily news spread. We're not near that. The negative things, the headwinds that we're going to have is continuing that cautious and savvy consumer. They're obviously still, keeping their money in their pocket until they see better days. And I also think, yes, the construction slowdown, certainly in that sort of commercial and also large residential building projects, will have an impact in terms of our GDP numbers. So that's how we roll out, or summarise the economy as it currently stands. So as I close out this week's announcement, once again, it is a story of, 25 basis points cut from the RBA, cash rate 0.75 of 1%. What are the banks going to do? What will they pass on? They've got a balancing act to play here. They obviously have people who have savings, and that's going to impact them. So my view is that most of the banks will cut between 15 and 20 basis points for this particular cut. If we see further cash rate declines into the new year, I suspect we might only see 10 basis to maybe 15 basis points if there's another 25 basis points cut. So don't expect the full 25 basis points cut. It's probably not going to come, but it's still going to make the mortgage burden a little bit easier if it's 15 or 20 basis points. So it's over to the banks now in terms of what they're going to do in regards to that. So there it is. The RBA have made it very clear this is what they're after. They're going after, again, lower employment. They want to see a fall in front of unemployment, and they believe that that will then take out the spare capacity in the labour market, and also over time start to see inflation starting to flow back into the economy. So until next month, make sure you're looking at your mortgage, making sure you've got a great deal and you're maximising it. And also in the property space, the marketplace is moving. So if you're looking to get into the property market, start doing more and more research around where you can find those best opportunities. If it's owner-occupier, do your homework around, the amenity in the area and those types of things, and the supply in the area. And also investors, the same story applies. Be a borderless investor if you have to be, to get best opportunity over the short, medium and longer term.